And welcome to today's edition of the Lance Roberts Show podcast right here at realinvestmentadvice.com. And of course, today, a boomer day in the markets because, well, Fed Chairman Powell backed down. That's right, after recent comments from President Trump about him not being happy with Jerome Powell because Jerome Powell has continued to raise interest rates. Jerome Powell folded today and actually caved into the pressure from the White House, talking about today about now being closer to the neutral rate than not. Now, just remember, in October, just last month, he had said that we were very far away from neutral rates. He still had a long ways to go. That really put a lot of pressure on the markets because the market's expecting that there was going to be 3 to 4 more rate hikes coming in the next year. Today's announcement by Jerome Powell says no more, we're done. In fact, the market's are pricing in just 1 rate hike in 2019. Of course, with Jerome Powell today saying that, well, no more rate hikes, the market actually loved this, and we got a nice rally today. Now we're pushing right back up into resistance here at the 200-day moving average, 50-day moving average just above that. Very likely that we're going to see some push here over the next couple of days to try to get this market to move on higher. We'll see. The next big hurdle comes this weekend, the G20 meeting. Donald Trump, President Xi, talking about trade relations with China. If they can come to an agreement, which is really looking to be much more likely that Donald Trump will back off of his stance with China, he will come to some agreement that may not have a lot of teeth to it, but some agreement regardless that is going to give a lot of buoyancy to the market. So look for this rally to try to move higher here. If we can move back above this resistance at the 50 to 200-day moving average, that's going to give clearance for a further rally heading into the end of this year. Of course, a lot of this really depends on the one thing here, of course, is economics and earnings growth. We'll see how that continues to play out here. But in the short term, today's announcement took some pressure off the markets. We saw a lot of short covering in the rally today. A lot of the stocks have been the most beaten down recently. Amazon, Apple, Microsoft, those have had the biggest rallies today. That's really those big cap names lifting the markets. And of course, a big rally today. We'll see if this follows through tomorrow and the next day. That'll tell us a lot about the strength of this potential rally here and where we go to. So, but again, this is good news for the markets. That took some pressure off. And surprisingly, while stock prices moving up, we also saw bond prices actually doing well today, continuing to move up here as well, because again, concerns about slowing down the rate of interest rates also says, well, the economy isn't growing as fast as what he had said previously. The neutral rate now down to 2.25%. That's about where economic growth projected to go from 3.5%. Just reported today, economic growth 3.5%. That's going to slow by a full percentage point going to next year if we are indeed closer to the neutral rate. That gave some buoyancy to bonds today as well.
Got a question for Lance later? Ask now at realinvestmentadvice.com.